Morning, everyone. I welcome everyone for recall and revise session for our exams. This is a marathon. So today we are having a CA final paper 1 financial reporting marathon. I am Hemnath. I'm also a CA final student. I will be host for today's session. I'm very happy to host this session. I am very delighted to welcome CA Muralidharan sir for today's session. He will be taking our class today. The marathon will be taken by Muralidharan sir, and I welcome all the fellow students. I hope you will get very great knowledge from Muralidharan sir. And I would like to share some short info about Muralidharan sir. Muralidharan sir have cleared SCA at the age of 21, very young age of 21 itself in the year 1984. Actually, clearing at CA at 21 age is very prestigious. It is very
1987 it was.
Yeah, 1987. Yeah, correct. 1987. And he's a senior partner at L. Muralidharan and Co. Um, he's having a wonderful teaching experience of 30 years. So he have a lot of knowledge to share with us. I'm very excited to have this session, sir. I will hand over the session to Muralidharan sir to take the marathon session.
Thank you.
Thank you.
Thank you, Hemant. See the session. See, in fact, when good morning to all of you. When brief introduction has got to be given, a brief biodata profile and all that I just said, it is 2 lines only I just given. I wanted to tell you that clearing the examination should be at the top of our mind, nothing else. So keep off. I'm just not bringing out any advices and all that. One can easily understand that cause and effect is all you find in this world happening. Karma effect. If you study well, you will get nice marks. So for that, you have got to give a lot of time. And briefly, I will tell you about some personal discipline that you have got to develop, because in 3 hours time, if I read the topic title and the syllabus, time will get over. So therefore, I just thought I will just talk generally and do's and don'ts, and particularly as what areas that you got to cover, without which you should not just go. So when you have 15 days plus for your examination, this is the time at which you would be revising, and it is the right time that they have conducting this marathon session. The moment when Kalai was just sending me the SMS, I said it's okay. For students' course, 3 hours at a stretch would mean I got to personally prepare. Gave this notice to my wife. Firstly, I just asked her whether it is possible for me to take up 3 hours at a stretch. So because breakfast for me, lunch, what others take will be taken at breakfast time. It is brunch time. So I had stomach full, and I can just definitely share some good experience about our CA course. I hope that all of you could just see this screen that I'm just sharing. Let me just check up once again. Share screen. Audio is slightly low. So yeah, this audio is what I'm just using for my business meetings, and possibly others need to just check up. So let me also find out my settings. It is 100%. It is just like that. So any other person who can communicate, please let me know. I will try to increase my volume then. Machine wise, it's all
Now it's a
good.
little bit fine. So
Fine
now it's
only. Oh, it's fine. Okay. Yeah. Now I see sharing coming up. Yes. See, FR, where students are having 4 modules. Module 1, 2, 3, and 4. And I would like to tell that areas that we have in can be classified into 3. Most important areas. Moderate important areas. And minimum important areas. That means no area is to be considered as not important. All are important areas. Most important areas are, that is, you don't find a question paper on FR without questions in this topic. I would say consolidation. I would say business combination. I would just consider financial instruments. Then indirectly deferred taxation. If not directly, indirectly also you would have. And these I consider as very important. That is, a person who is preparing for the examination should do all the problems from the institute study material on consolidation, then business combination, financial instruments, and deferred taxation. So first and foremost thing, if a person does good amount of homework on these 4, I can be sure that 50% is assured. Leave that some computational error here and there. I'm just telling you that by all means, minimum 50 is secured if a person is having confidence in these 4. For that, he should have just done lot of problems. Lot of problems in the sense, May 2022 examination question on business combination was exactly a pick from institute study material only. One more important thing is that, let me tell you that our FR is like a group itself. You have 4 modules. So that by itself is a big ocean. It represents the entire IFRS Indianized version. Even today, I just feel it is incomplete for me on studying this Indias. Even today, I'm just doing that for various other purposes, for application in practice, for my own academic interest. I just find there is no time frame within which we can complete this. So it is a continuous process. So for your examination purposes, go prepared for consolidation, business combination, financial instrument, and deferred taxation. Very, very important. Moderately important are 103. What is this 103? In fact, I would add 2 more. Revenue recognition. Revenue recognition, leasing, I will put it as moderately important. So this would be 50%. 103. What is this 105? 103 is business combination. 105 is non-current assets held for sale and discontinuing operation. 105, non-current asset held for sale and discontinuing operations. This, of course, our institute has got special liking. leases, they have a special liking. Then 102 share-based payment, on which I do not know as institute has got a special liking. Why I do not know, but they just keep asking questions. Then agriculture, then PPE, impairment, intangible, on this I would consider that even fair value measurement 113. Rest of the matter I will put it under minimum importance. Even 101 also I can take it up under this category only. First time adoption. So under this you will get, so rest of the matter like 1, 7, 8, 10, then 19, 24, 34, 33, 37, 40, 108. Then when I say consolidation, it is not one accounting standard, it is consisting of 3. So parent subsidiary, investor associate, and joint arrangements. And financial instruments 3, 32, 107 and 109. And 21, there is forex. Yeah. See, totally we have 35 accounting standards available. And one more important thing is that we should exclude certain topics, even though we have it in the institute material, by looking into the institute's announcement made exactly for this particular session. Latest announcement for November 22. So kindly exclude certain items which they have said do not study, means please do not study. Under that, we have Ind AS 16 in which Appendix B. So don't study. Then we have in Ind AS 37 Appendix A and Appendix B, please just exclude. Then other Ind AS by and large totally that you got to exclude are hyperinflationary economies, insurance contract, and 106 and 114. Last item, please understand. Item number 5, analysis of financial statement. You don't have it at all for your examination. So first and foremost thing is that you got to know that these items are not within your ambit. Okay, so feel happy that some portion of the accounting standards and some portion of the topics we do not have. And apart from that, we have certain topics, corporate social responsibility and integrated reporting. So by including all this, I would say this portion occupies 60%. Moderately important will occupy 30% of the portion, and the remaining 10% will come under this particular category. So the moment when I just put certain accounting standards here, do not consider that you can leave it. It is not like that. Examination passing is an art. It is a sort of managing the examination as how a person is doing. Same is the way he will manage things and do that in his practice and in his employment. You would have studied in the subject auditing that they will put all A to Z conditions to check. whether you would consider all those items readily available in your table for audit. Client will come out with umpteen explanations that he is not in a position to provide those, but auditor is not going to stop his audit, and he is going to measure the risk that he would be taking up, and accordingly he would express his opinion. Same way, if all the subjects from cover to cover, when I got to read with so many subjects and with article shape and family pressure, it is not possible for us to do justice 100%. It is not to be misunderstood that I am just giving a license to leave anything. I am just telling you the bare fact as how you got to manage. See, when I took my examination, I have also had the same pressure, not this many topics, in a different way. Times were different, but you find the challenges are many at this moment. You got to cut down all your contacts in the form of WhatsApp, watching TV, going for movie and all that. So television, all this you have to cut and take up. Very important. I'm just not there to give any advices. I just don't like. But if it is really required, I just take the advices from elders and even from young citizens also. Even some of my article students, when they tell about a new thing or an operations in Excel, we just do learn. So please just understand 35 Ind AS you have for your examination, but you do not have analysis of financial statement, some portion of the accounting, some portions of the accounting standards you don't have, some accounting standard itself you do not have. Now coming to the bare discussion, now the area which I would like you people to focus is first and foremost is 103. Ind AS 103. Without 103, there is no paper at all. That is the nucleus of the paper. And in AS 103, please just understand, try all the problems. Try all worked out problems. And book back questions. Book back questions. Correct? Try all worked out problems and book back questions, suggested answers, RTP and MTP. Go prepared for that. Maximum to maximum some 30 questions or so you would be having, which might cause a lot of problems in the sense that unless you go prepared, it is going to be a tough time under examination conditions. So please just don't waste your time and focus on that. So people talk something about in old AS 14, where you have pooling of interest method and purchases method. Here we do have acquisition method as well as pooling of interest method. This pooling of interest method is possible when the company is going in for merger with related parties such as subsidiary, associate, and so on. So what is the uniqueness that you have in the case of pooling of interest method and how it is different from that of the acquisition method? Please just understand, closely follow. There are some problems where they see one of the division is just sold to another company which is formed by that particular vendor company, and by itself it takes the shape of a parent and subsidiary relationship. When some of the divisions are transferred to them, you are expected to take up only at the carrying amount of the assets and liabilities which were there in the vendor company's books. I mean, the purchasing company is expected to record assets and liabilities that they are taking over only at the carrying amount of the earlier company's books. That is, whatever values at which they were appearing or the values that you should assign for those assets and liabilities. And that is possible only for certain sections of the problem. As you told you that when they are equity transaction or where you find a transaction between parent and subsidiary, where you don't have fair value measurement at all. But when merger is taking place between two unrelated parties, majority of your 103 would be applicable, and there you are expected to use fair value accounting. So please be careful that the problems can be divided into two, as where fair value accounting is there. The other one is carrying amount is very much there. Yes, Kema is just making a mention that we will take up at the end of the session. Okay, but between 12:45 and 1, their participation we can take up, unless if it is too urgent, if it were to be where 15 minutes time is going to be too short. If it were to be very urgent, you can shoot at any point of time. The customary thing is that only at the last it would be fine. Unless it is so urgent, you can just proceed. At the end, it will be always be fine. So fair value and carrying amount accounting you have. So please focus on this as well as this. And one more important thing that you people need to do is do not miss out this deferred taxation. Why? Because deferred taxation in DES 12 is not one accounting standard that you are trying to neglect or leave it off. The problem is that this deferred taxation impact you have it in every other accounting standard. In every other accounting standard, you do have that. So therefore, it is a must topic that you got to learn. That is the reason as why I have kept deferred taxation as part of most important. So every such analysis that we just bring out has got an impact. That is not just like that I'm just communicating. I'm just telling you with some observation. Where is that we have the observation? And even in 103 also we require deferred taxation knowledge. Because in deferred taxation under NDAS 12, we follow balance sheet approach. Balance sheet approach for DTA and DTL. See, many a times when classes are conducted, when I ask the question, which topic or which accounting standard they find it difficult to comprehend. Majority of them used to tell about deferred taxation. Consolidation, financial instruments, they tell. But some of them even tell that is all manageable, sir, time consuming, but by reading it out many times, I'm not in a position to proceed. Say, I would like to take a few minutes to discuss about deferred taxation, possibly some ignition I wanted to give. Because we are all born intelligent, otherwise we would not have just come to the level of CA final. We are born intelligent. Say a little bit of fine tuning when you make, automatically you will take to the next destination our journey. So what is that? So we understand, see briefly, 10-15 minutes I will spend on this, and very important ones I will spend like that, so that we utilize the entire 3 hours with overall coverage tips for the main examination. And that is the way I thought these 3 hours can be devoted usefully. Now, if you have any other plan on special focus on certain items, please let me know, but we may have to leave out other accounting standards. So my idea is to give overall coverage. Now, coming to deferred taxation, we all understand that AS 22 earlier accounting standard, we were following income approach or profit and loss account approach. Income approach or profit and loss account approach, whereas NDAS 12 is providing balance sheet approach. So people might ask this question, what is the big difference between the two? Now I will put the case this way. We have the deferred taxation aspect is coming up because you find the accounting income and the total income or taxable income are not the same. When they are not the same, you say there is a difference. The difference may be classified as a temporary difference, the other one being permanent difference. Permanent difference where there is a irreparable difference that you have which cannot be reversed at any point of time, you take it as permanent difference. What is that? Example, cash payment in excess of 10,000. A person had paid more than 10,000. during tax audit, auditor had just said this I will disallow. Okay, disallowed. You have added back. But what will happen to your accounting? Whether you disallow or not in income tax, expenditure is expenditure that will be booked, and he will be booking that as an expenditure, and he will provide profit based on that. It is going to be lower. In income tax, to that extent, it is going to be higher. Okay, to that extent, I have to pay a higher amount of income tax. Whether the amount of tax that I have paid in excess or what is seeming to be in excess, can I recover it in the future? Ask a question. The answer is going to be in the negative. The department would just say you don't have any act that where you can cleanse your sin. So it is not possible. So once paid, paid. So it is like a sugar cane in the mouth of the elephant. Gone means gone. You cannot go back and put your hand and get the sugar cane. That's all gone. So that sort of thing is what you call it out as permanent. So next example for a temporary difference is that I have affected the payment where I have to deduct tax. I have forgotten. I did not know. I have paid him. Okay. How much is going to be the disallowance depending upon who is the recipient, whether he is a non-resident or a resident. So non-resident means 100% disallowance, and resident would mean 30% disallowance. I'm just not going into the deeper portions of tax. Just a broad bird's eye view I'm just giving you. There, let us assume that it is 30% disallowance. Can I ask for that? Can I rectify my mistake by whatever I failed to deduct in the future payments? The department is saying yes, it's possible. So what is disallowed in a particular year, the same expenditure will be allowed subsequently, and thereby the disallowance is only on a temporary basis. So what is seeming to be that I have paid excess amount of taxation is likely to be adjusted in the next few years when I am completing the action of deducting the tax. So what is appearing to you that you have paid excess amount of taxation in the later years, you can adjust against your liability whatever sum that you have paid in excess, which you call it out as deferred tax asset. Similarly, you can have a depreciation which in accounting I would book on the lower value. As far as department is concerned, tax department is concerned, I would have claimed greater amount because of certain sections. I would have claimed additional depreciation based on my manufacturing abilities, that being a new machinery, or I have set the place in a particular location. Variety of reasons I take and claim excess amount of depreciation, whereas in accounting we don't differentiate between whether it is a manufacturing or a trading, whether I am locating the asset in a particular location, it is all the same. So higher amount of depreciation I have just claimed. Because of that, my total income or taxable income is on the lower side, and I pay lower amount of taxation. Okay, so it is nothing but an accelerated depreciation followed in taxation, which in accounting you do it a little slowly, but during a span of say 5 years period, both taxation and accounting, let us assume for argument's sake, they are going to be same. So what appears to you that your total income is less and you are paying lesser amount of taxation now, maybe in the later years, as per taxation, you claim lesser amount of depreciation. That point of time, you have got to pay greater amount of taxation. So it is on account of you claiming the tax, that is depreciation earlier for a higher quantum, you are paying it later, which fact was known at the point of time of claiming the depreciation in the very first year itself. So therefore, when you know a fact that the present action is likely to cause an impact in the future where you may have to pay greater amount of taxation, so it is a liability which is known to you. You are expected to create that liability in the name called deferred tax liability. So this way, analyzing it, keeping your income as the base was encouraged in AS 22, and that is the way people have done in the past. Now, that particular demonstration I'm going to give. So this is overall, I'm just giving you the example of deferred tax asset and deferred tax liability. And now I will talk something about profit and loss account approach and how the same will be taken up under easier approach, that being balance sheet approach, and how that balance sheet approach is changing the dimensions of accounting entirely, not only in this accounting standard Ind AS 12, but also in variety of other places. And that is the one which I would consider as a learning point for all. Even if you have just not learned, let me tell you that the amount spent here is going to be very useful, because you are not only addressing Ind AS 12, but also to the other accounting standard, especially on to Ind AS 103. Now, let us just take up a particular example. Maybe 10 minutes time we will be spending on that. I normally keep A for, not Apple, A for accounts, because I am a chartered accountant and I do take class for accounting. So I don't get better opportunity to tell. Even to my grandson, I tell A for accounts. Next one is tax. Next one is, what is the sort of impact it is going to make on your total income? What will be happening to your total tax liability? What is that it will be resulting? Say I take up firstly depreciation. Depreciation as per accounting is 40,000. As per taxation it is 40,000, 70,000. Because of that, your total income is likely to be less, because I claimed higher amount of depreciation expenditure, total income will be less. Because of that, I am paying lesser amount of taxation. What would be resulting? What is that I have got to create? I have to create deferred tax liability. Correct? This is the way you call, what is the name through which you call this approach? You call this approach as profit and loss account approach. Why do you call this as profit and loss account approach? The moment an item of expenditure is taken up, I have just taken up income as the base. Income is nothing but profit or loss related to your profit and loss account. And income tax department is not really worried whether you call it out as deferred tax asset or liability. It is only in your accounting you are doing this operation. So therefore, it is purely an accounting job. When you are finalizing your company's accounts as an auditor, we are expected to look into the DTA and DTL with greater amount of care. So therefore, it is affecting your profit and loss account financial statement, and the statement is given for statutory purposes to various agencies, and we look into the creation of DTA and DTL using profit and loss account as the base. Now, the same subject matter, instead of taking it up as a depreciation, I will take it up as a WDV. On the balance sheet side, I am taking up. All of you closely follow. On the balance sheet side, I am taking up. What is that? Because of my lesser amount of depreciation, my WDV in the balance sheet is likely to be more by 40,000. Because of claiming greater amount of depreciation, my WDV will be less by 70,000. I am talking about the depreciation aspect only. Because of that, what will happen? You can say, comparatively, you can say this will be more by 30,000. You can say that way. We can avoid confusion. Correct? So your accounting books, when compared to tax base, we don't call it as tax records. Accounting standard is saying that as tax base, and they say it is 30,000 rupees more. Now, your balance sheet is more by 30,000. More in the sense, I am comparing the balance sheet for tax purposes and accounting purposes. So something is overloaded on the asset side. How do I balance? There are two ways of doing things that you have. One, you reduce your asset or increase your liability. Correct? So therefore, straight away you can say this will result in DTL. You just don't have to think about what is the impact on total income, on tax liability. Straight away you can tell asset more, asset excess. What is it you should do? Increase liability. Now balancing. You don't have to increase your liability by 30,000. I am telling you what impact it will cause on the balance sheet. You are not looking into the amount. It is not 30,000 and 30,000. I am not talking about the value there. I am talking about the impact on the asset. Assets are more. So what is that I should do? I got to increase my liability. So create deferred tax liability. This is one. Then the next is that it is not necessary that I got to increase. There is always a chance that it will result in reduction on the asset side. So you can put it this way: create deferred tax liability or reverse what? Deferred tax asset. Always remember, when your asset side are more when compared to the tax base, it will result in creation of DTL or reversal of DTA. So when is that reversal of DTA? Only when I have created DTA, I can reverse it. Only when something is there, I can take it. When nothing is there, I cannot take. Am I right? So please understand that either it will result in creation of DTL or it will result in reversal of DTA. Now, third one, I will take the WDV lower side and this on the higher side. My asset side balance sheet is lower. Then what is that I should do? When something is low, what is that I should do? If my sugar level is dropping, what is that I should do? I should always have a chocolate or sugar candy and take it. So create DTA, or what is that you can do? So reduce the liability side, reverse DTL. Are you clear? Do you have any difficult moments for learning this? This is for the asset side. Liability side, similarly, you can tell. So number 4, liabilities, I have more in the assets, less as far as tax base is concerned. What is that it will be resulting? Something is more on the liability side. What is that I should do? Create DTA or reverse DTL. How come? Can you give an example? WDV you can understand. Can you give an example? Yes, we can create an example. No big deal. Say I am a company where I am creating provision for warranties. Ind AS 37 is telling that in the year of making profit only, you are expected to create provision for warranty. That is matching concept you have. You don't do it in the year in which you actually know it. So that is the reason as why you have provision. I have understood and I have learned by attending to one seminar conducted by an accounting faculty. I just said, okay, I will create. I have created. When I have submitted the papers to the department or even tax auditor himself is not allowing this item of expenditure, is disallowing. Sir, only to the extent of cash expenditure that you made. I mean, actual expenditure that you made, you will be allowed with the expenditure. So this provision and all that, they do not know. That and all they will not be knowing. It is only provision, sir. You will create a lot of provision like that and underbook your income. That will not be accepted by the department. So they will add back. So because of they adding back, what will happen? My income will be going up. My tax payment will go up. That will result in deferred tax asset where I have reasonable certainty that this amount can be recovered in the future. Therefore, it will result in creation of DTA. If it were to be resulting on account of not creating or not paying the amount of liability in the future, I would have created deferred tax liability earlier. That is getting reversed. Similarly, item number 5. Another liability where I am showing less, accounting it will be more. Okay. So this will result in something is lower on the liability side. Create DTL or reverse DTA. Correct? Are you clear? Now, from where we started, income based, now what is happening is balance sheet base. What is that? Balance sheet is the basis. That is the one we call it out, that we are shifting from profit and loss account base to balance sheet base. I hope things are clear for you. Now, what sort of impact this Ind AS 12 is to do on 103. What it will result is, on acquisition, I pass journal entry. I debit PPE. What it was available at 1000, now fair value says 1700. Debit current assets 900 rupees, 900 rupees. No change at all. Credit current liability 400 carrying amount. These are all carrying amounts. These are all fair values. 400. I create purchase. I am paying purchase consideration. Cash, bank, equity, share capital, whatever may be their name. Okay. 2100. Now the question is, suddenly I am finding an asset is shifted from PPE 1000 to 1700. Now you just find the department will trace the PPE from whom you bought, and they will not accept this theory of 1700. You know, that section 43 or something like that, where they tell something about 41, say where they talk something about the cost concept and all that. They will tone down your cost. You are artificially increasing it for the purpose of claiming higher depreciation. So therefore, they will not accept. That is a point that you have got to understand. But for the sum that I am increasing in the balance sheet, 1700 is what I am just putting. 700 excess. So when something is excess on the assets, what is that I should create? I should create deferred tax liability. So on 700, I am taking up 30%. Let us assume that it is 210. 30% on 1700 minus 1000. I'll take up 210. Now let us just look into the debit side total and the credit side total. So for the sake this, I will make it out as 2000 or 1800 I will put. Okay. Now let us affect the total of debit side. Total of debit side comes to 2600. Total of credit side comes to I'm sorry, I will make this as 2500. I'm making a final change. Okay. 400 plus 2500 plus 210. This comes to 3110. Right. Now there is 510 rupees goodwill will be there. Correct? 510 goodwill will be there. So by applying the principle of balance sheet approach, when I have goodwill here on the asset side with nothing there, you may ask, sir, something on the asset side with no base on tax. So this will result in deferred tax liability is what people will be telling, and a person might religiously take it up as to deferred, that is to deferred tax liability once again on 510, 30% into 510. He might take it up as 153. Here is a place where accounting standard is telling, please do not create deferred tax liability on account of a balancing figure which is coming up, that being goodwill. So therefore, one moment. So this goodwill of 510 on which you are not supposed to create. So please understand there is a prohibition given that you should not be creating deferred tax liability on account of goodwill that is created. But that prohibition is not applicable to all. It is applicable only to goodwill. And whatever detail that we have created here is correct. And on that basis only we will be having. Otherwise, it will result in the form of a circular reference that we normally have it in the case of Excel function. Remember that if you take one base and effect that as a total, then it will show with an arrow mark saying that it is circular base. Likewise, where they prohibit that sort of scenario. So when goodwill is resulting, you are not supposed to have DTL there, and all other matters are the same. So therefore, I wanted to tell what sort of impact deferred taxation could cause on other accounting standard, especially Ind AS 103. I hope that this point is very clear, and I have just spent adequate amount for the purpose of finding out the difference between income approach, I mean profit and loss account approach with balance sheet approach. So definitely this will be of great help to you in understanding this. Please solve all the problems in 103. Please have a good grip on 103. Please practice all the problems on 103. And before doing that, have good amount of knowledge on 12. So with that, these two accounting standards I just knocked off. Business combination and deferred taxation. Then about consolidation, people have their own reservations on consolidation. What is that reservation they have? See, right from my student time onwards, they were telling consolidation is very difficult, better neglect, better ignore. See, always remember, when you ignore notices of income tax department, you will know what sort of penalty class of section 270 and all that will come and play, and that may cause heavy burden to you. So please just do not neglect. When problem is there, go and face it. So for complaints itself, they will award marks. So let me tell you, even in CA Institute also, even if the balance sheet is not agreeing, don't worry, make a sincere attempt. Do not strike. When you are making too many alternative solutions, examiner would be knowing. Don't ever strike whatever you consider that it is wrong. Let the examiner decide as which one is a better presentation. You give them the choice. It is not that CA Institute should give you the choice. You do that. So don't ever just strike it out, because once you strike it out, then it is not qualifying for any marks. Even if the second alternative is incomplete, only that much will be considered. If the first might be correct, so I'm just making a general discussion. Please do not strike. So think before you ink, and do not strike it out. Okay. Think for a moment and then try all this. Okay. So now consolidation. About consolidation, CFS, I would say it is very easy. How do I say that it is very easy? Sir, people tell, say all of you, please just understand the big problem what people have is that it is about CA course. Non-CS will tell. Our uncle residing in the neighborhood will be telling 1% result in CA. Say, who conveyed 1%? 1% never happened in the history of CA, but people around they talk. Same way, this CA students who not attempted, understood CFS, they used to tell our seniors, even I'm not an exception, I'm also a victim. Say, they said, Murali, don't study this. Don't study this. Say, please understand, others are having fear does not mean you should have the fear. See, when I was young, I just found when dog is chasing, I will be running. I will be running with greatest amount of fear in my life. So while fear is gripping you, our glance will go up. Don't disturb. My flow is affected. So it is CA Institute class, not any other thing. Business meeting. Don't miss it. See, I'm just instructing my article student not to disturb, because it is in our office we are doing, not in any classroom. So he did not know that. Sorry for that. See, coming to this, our glance will generate that adrenaline gland which the dog will smell, and that is an incentive for it to chase once again. See, when you do not have the fear, stand there and stare at that, it will just go off. So, best thing in the world is that you face it. And at a later point of time, we had the opportunity of having a pet dog. Only then I have understood that how to manage, not after having a pet. But people told that you just chant whatever name of the God that you pray. I just thereafter, even in pitch darkness, somewhere in Kerala, I got to move from the hotel to a place where it was about 4 o'clock. I got to pick up. There is go there. It was a pitch darkness. 3-4 dogs were surrounded, and I just stood, and it just gone. So therefore, fear is the killing thing. In Tamil, we call it out as Bayanda Saga there. So that fear only will kill. So don't have the fear. So face it. Now let us just know how to handle it. See, if jackfruit is considered to be very hard, looking at the surface, but how sweet it is. The fruits are all very sweet. I like jackfruit like anything, but looking at the outer surface, do you mean to say that? Can you bring about opinion based on that? Appearances are always deceptive. This is my personal feeling. So many a times they used to tell, sir, looking at your face, I find that you are a very tough man. See, God has given this face. I cannot change it. I can just apply some cosmetics. That's all, which I don't do that. But outer surface, people used to say first impression, best impression. That's all, worst impression. So consolidation, for which you spend some amount of time, you will find it very easy to operate. There can be some 21, 22 adjustments only you have. What is that? 21, 22 adjustments only you have. The problems that you face in the examination will be a combination of 4 or 5 out of 21. That's all. If you know how to handle 21, you can finish off according this particular CFS just like anything. Now, I will take 10 to 15 minutes to discuss about the CFS and drive home, drive away the fear. I will tell you this. So, in CFS, there are three letters you have CFS. It is not cash flow statement, consolidated financial statement it is. There are 3 things for which you look at: goodwill or bargain purchases. Next one is non-controlling interest. Lastly, it is consolidated reserves and surplus. Only for these 3 things you are looking into in the consolidated balance sheet, isn't it? This NCI, you call it out as minority interest in the old syllabus. If you are from the old syllabus still continuing, NCI is nothing but minority interest. Capital reserve is referred to as bargain purchases. Now let me tell you, your old AS 21 and the new one 27 and 110 are indicating almost the same. Now, in consolidation, there are 4 C's we have. That is the way I normally do. 1, you take up the cutoff. The other one is classification. Then you prepare one chart. And lastly, you prepare consolidated financial statement. So there are 4 C's that you have. Very easy to handle. How do we do that? So though I just said that there are 4 C's, created some amount of anxiety when I say that, it is very easy. The entire consolidation within 15 minutes, I cannot teach all 21, but I can develop that confidence required to take up onto consolidation. So you don't have to have the reservation and just go running. Go and hit it. So when the ball is very fast for delivery, Tendulkar finds it very easy. It is sweet thing that he will bat. Tendulkar will fail. Sachin will fail only against medium pacers where the pace will be variant, and that is a place at which he will be going on. When it is very tough, it is very easy. Let me tell you, when it is very fast, it is very easy. So many a time psychologically, we have wrong impressions. A person who is riding or driving very fast, he is a good observer on the road. Only a person who is observing all the happenings can make those changes. That is the confidence he has got. That is the reason as why he is going fast also. So therefore, you just don't have that feeling that it is very tough, I will leave it off. Please just don't do that. Now, what is that we should do? Except for these 3 items, the rest of the matters are very simple to do. People used to ask this sort of question from foundation to final, where consolidated balance sheet in the suggested answer they have given in the very first page, and working notes later, schedule to accounts later. Should we have to prepare in the same fashion? I said, the institute has got 3 months time to prepare suggested answer, whereas you have only 3 hours to take up the examination. They are picking it up from already solved portions of institute material RTP. Therefore, they can copy paste in any location, whereas under examination condition, you don't have the luxury. So you just go according to your format. Examiners know that you are writing examination. They are not expecting you to do some angel's job. So you can't do magic there. So go, first thing, accept that you are a student, and everybody knows that you are a student. Therefore, you just go according to your style, but leave left hand side margin, top margin, right hand side margin, because people scan your paper and there is a chance that our writing might just go unnoticed. So therefore, ensure that a good space that you take up there, and none of your writing should just go off. Now, coming back to this, only for these 3 items, you are doing this. The rest of the item of assets and liabilities, you can simply sum up and keep it ready. So when a student was asking, why not a consolidation in the very first page itself? Yes, you can do it. No problem at all. Visualize how many items that you have, give space there, and develop a consolidated balance sheet, keeping these 3 locations pending. Okay. Even when you have 5 minutes before you, don't start things. So please just understand. See, people just make calls. They are not knowing about this short notices and all that. So please just understand that for all items of other assets and liabilities, we can make a good preparation, add and keep it ready, so that you work out only for this. Even when you have 5 minutes, you can do this. And one more important thing that you can do is that non-controlling interest in one consolidated shot, you can finish it off. What is that? I will take up one problem and I will show you as how NCA can be worked out. What is that you do? Your net assets of subsidiary company. What is your net assets of subsidiary company? Equity, share capital plus reserves and surplus on this date, or assets minus liabilities. So on the date of consolidation, you take up and apply the NCA percentage on net assets of the subsidiary company. NCA percentage on the net assets of the company, you can apply 90% of the case, it will be correct. Except for when there is a mistake in the net asset itself, you will have a problem. You can update this also. Then next important thing that you can update could be goodwill or bargain purchases. What is that you can do? As how you have found out the net assets of the subsidiary on the date of consolidation, you can find out the net assets as on the date of acquisition and find out the parent's share and compare it with the investment that he had made or parent had made. You will arrive at the goodwill or capital reserve or bargain purchase in this case accurately. 90% of the case, it is going to be the same. And when all other items you have updated with greater amount of confidence, consolidated reserves and surplus is going to be a balancing figure. Even in 5 minutes time, you should be in a position to have a consolidated balance sheet. See, the examiner may not be asking, how did you get? You show your working as how you got goodwill, bargain purchases, and NCA. But one important thing that you should do is that you have to put your computation, whatever you have done in your calculator, into your working notes. Only then he will believe. Otherwise, he will think that you copied from your neighbor by peeping. That you have not done. So therefore, when they say show all your working notes, should not be misunderstood as only those items that you title as working notes as working notes. Even the computation that you are showing. So if parents figure is 40,000, subsidiaries figure is 30,000, you show that in the inner column and take to the outer column 70,000, or show that in the inner column 70,000 less mutual owings 10,000, and outer column you take it out as 60,000. So this is also a working note. So for all these working notes together, they are giving 1 mark, or maybe size of the problem would be 2 marks. So therefore, when you show the working notes, even when the balance sheet is not agreeing, or you're not total, but still it is agreeing, then also they award marks. So Abdiya. So this way, working notes should be done as not as working notes. Even whatever inner computations that you have, you should take it as working notes only. One moment. So you consider this matter as a very simple matter only, and don't take it up as difficult moments. Okay. So you have that in your mind. Now, we can solve a problem when time is permitting. So we are having before us consolidation we have just done, borrowing cost we have done, deferred taxation we have done, and financial instruments. See, let me tell you, say, you know that certain things in our life, we know, but we do not express. See, my dad is there who had just filed a police complaint on a neighbor there. That news is coming up because he is doing some construction activity and all that. This is causing a problem for me and to my brother, and all our resources are sent. He is at the age of, say, 85. You cannot direct him that you should not do, keep rest, take rest and all that. He will not accept. So I sent my son, office staff, all that to understand what exactly is the problem. So coming to this particular matter, because my dad may not understand at this moment, he has got loss of memory and all that. So why I am telling is that in case I slip in continuity, please just correct me. So understand that financial instruments, say certain things we just do, but we will not be in a position to express the same way. For example, I award to my employees what? 4% loan when market rate is going to be 10%. Why all of a sudden I have love and affection to my employees? There are very many ways through which I can retain my employee by giving them share-based option, or there is share-based payment, ESOP, ESPP, stock appreciation rights. I can just give variety of things. I can give variety of things. But if the employees are not enticed by that, or when they are not enthused by that, because in all these cases as ESOP and ESPP and SAR, employees have to, there is invest money. Say, employees are always having the mentality to make money or derive benefit. Here you put one condition that 3 years you have to buy at this rate. Person who is not having liquidity may not do that. But when you provide him a loan, where in the outside market it is 10%, where it is available at 4%, definitely, please understand, many will participate. And what is the value at which it will be stated in the balance sheet? In the balance sheet, we will take it up as on the asset side. Employees loan at the rate of 4% only, we will take it up. But prima facie, we know that we have booked a loss of 6%. Earlier to the advent of financial instrument, whether we have disclosed this matter as a loss, answer to that question is in the negative. It is something we know, but we don't tell. Something I know to my dad, at this particular age, he is bringing more problem to himself, to others. I can be angry with my child, with my daughter, with my wife, with my articles person, but not with my dad, because he is dad. At this age, going to police station, doing all this job is bringing more problem to us. Say he is constructing 1 or 2 days, he will make it right. Yesterday I made one panchayat and I just come, and today he is forgetting because he is having forgetting problem, memory problems. So please just understand, something we have but we cannot tell. That was old setup. Now you have got to tell what is it we should do. I will solve a simple problem for you to understand as how this had changed. And similarly, there are a lot of such things. We do have something called as convertible bond. In the earlier balance sheet and all that, we will call it out as a liability alone. But we know pretty well after some point of time, this bond will turn out to be equity. There was no indication in the financial statement that it will become equity. There is no scope that we had in the earlier legacy system that it should be disclosed as an equity. Now you have the scope. Now let us just take up firstly employees loan. Just 5-10 minutes, that's it. Loan given as 10,000 crores or 10,000 lakhs or 10,000 thousands. 4 years period. How this matter has got to be taken up. Now, let me just take up. Say 4 years period here, and they pay the loan at the end of the period because that is also convenient for them. What are the events that you have? Events that you have is interest 1 and the principal repayment. Then next item is cash flow. So when it is 10,000 multiplied by 4%, 400, 400, 400, and it is 10,000. What this financial instrument is telling is You have to, the fair value is 10%. Antara. One moment. So present value of cash flow. So when we are expected to record everything at fair value basis, fairness comes in every aspect and not only one aspect. So fairness would mean you are not given the loan for 10%. So 10% is the cost of capital. So whatever cash flow that you are likely to receive in 4 years period, you have to take it up at the fair value, means at the appropriate market yield, that being 10%, the sum of the future cash flows as how bond value is taken up. Same way in this case also we have got to take up. Now it is 8,100, you can say, rounding off. What is the entry that we are expected to pass? So debit employees loan not at 10,000, I got to debit only at 8,100. Debit employees benefit, which I expect them to serve for a period of 4 years. So I am prepaying that 1,900. Credit cash which I have dispersed 8,100 and 1,900 plus 8,100. This is the entry that we are expected to pass as how it will be taken care. Year number 1, 2, 3, 4. Opening outstanding of the asset is 8,100 and interest income that we have got to book will be the same 10% what we have taken up. And the next one is the cash flow. And lastly, it is closing outstanding. Just a simple problem only. So this is 8,100 multiplied by 10%, comma 0, because interest computation sometimes may result in decimals also. Cash flow is nothing but this. Closing balance is nothing but opening plus interest accrued minus the cash flow that we get. And next year it is going to be 8,510 and this is going to be 10% multiplied by 8,510 around, I have forgotten to keep that string dollar. And in this case 400, it is 8,961. Now in this particular case I will book 959457. Cash flow is going to be 400 plus 10,000 and this is going to be 0 and this number is going to be 10,400 minus 9457, which is 943. This is the way we are expected to complete the job. And in our profit and loss account, this item will appear on the credit side as by interest income at rupees 810. So year number 1, year number 2, and so on. By interest income 851. And this way the next one will be 896. Next year it is going to be 943. Then in each one of those years to employee benefit I have to amortize. 1,900 I have to divide it by 4. So 475 I have to take it up as 475 in each one of those years. Okay. So if I sum up all this, what will be the result? It is 1900 that we got spread. It is 3500 we have got spread. And what is the difference between 3500 and 1900? It is 1600. What is this 1600? In effect, it is 10,000 alone applied at the rate of 4% for 4 years will be equivalent to 1600. But thing is that the effect of 1600 as how we do will be different from what we have done and what we are doing it now. So in every accounting standard, there will always be some amount of shade of financial instruments you would be having. See, now I will just go a little deeper onto financial instrument, then you can easily understand why I make that statement. Now, before we could just go to the next accounting standard, very important one that I will take it up. So we all know that nowadays people classify in the balance sheet itself, not simply non-current asset and current asset. Even in the current asset itself, they are telling it is financial asset. Such a classification we never had before. We never had this sort of classification as current asset and non-current, fixed asset and current asset only. We are just learning something about non-current asset, tangible, intangible. In current asset, you have financial, non-financial. So therefore, we need to know what is financial asset and financial liability. Because when you say as financial instrument, in financial instrument, people say that it will give rise to financial asset of one entity, which will result in financial liability or equity of another entity, is what they tell. So therefore, when we are signing the balance sheet, when you are looking at the balance sheet, when somebody is asking what is a financial asset, you can't be just telling, no sir, I have skipped this particular item. You can't tell that. By telling that, we will feel really shy. I have seen one particular clipping. I have not seen the movie. A person who is claiming to be a doctor, another person will be telling whether I can have some drinks today. The person said, no, if you can't drink because you have reached a particular level. The person will ask, only this evening can I drink? The doctor will know that he is going to die. He will be telling, okay, you die. That is sorry, he will not tell you die. You drink. Next day, there will not be any problem for you to get up. That means, even if he is a villain, he is telling like that. Yet another patient will be asking, what is the treatment for this? You go to the street end corner, another doctor is there. The patient will be asking, why is that you are referring to him? Are you not a doctor? No. When that particular topic was taken, I was on leave. Openly will tell. That may be a joke, but you can't tell in your lifetime. So whatever today I am teaching is not the one that I have just learned. Only basics, debit and credit are all same. The rest of the matter are different. Today, when I am just telling that I can take SFM would mean, it is not the SFM what I teach today was the SFM I studied. It was some working capital, cash budget, ratio analysis, fund flow statement, cash flow statement, random walk theory. For that 70 marks I got. That even at foundation level, a foundation candidate can easily score. That is the status. To talk something about option, Black-Scholes model, what is it ND1 and what is the left tail, right tail and all that, that itself is a different discussion. So please just, you can't tell that we have just not learned. So financial asset is nothing but cash or right to receive cash or other financial asset or exchange of financial asset or liability which are potentially favorable to you, then investment in another companies, another entities, equity or debt or financial liability or your own equity distributed is what they go on telling about what is a financial asset by just really looking into the bare provisions of that. If you are not in a position to understand, please just don't worry. Everybody has got the same problem. But it is something like sitting in an English movie when others are laughing without we knowing. In Rome, we should be like Roman only. So when others are laughing, we should also be laughing. But we can't be a laughter stock that way. Try learning. So when I started learning other languages, where I'd been frequently to Kerala, there was one person by name Mahadevan Iyer. He was just talking over phone. So he was very angry. I was just having my lunch and I was just looking at what he is talking. He used to talk in Tamil with me. So he was just saying Parayan Patila top. He had just kept the phone. I asked, why is that you are very angry? What is that you are telling about Parayan Patila? What do you mean by that? He said, I can't tell, is what he said. Then I took it like this. Oh, he can't tell means it should be a bad word. No. So, sir, is it bad word, sir? That is that you are telling? Because most of us learn other languages only through bad words. Firstly, we will learn only bad words. Is that Parayan Patila? No. He said, Parayan Patila, I cannot tell. Is what I am telling. See, a parent or I do not know, a person is just making a call as whether Rosaline is available in the class. How a CA staff can tell that some student is there in the class or not. So he was just telling like that. So only then I understood, okay, languages have got to be learned only when you hear frequently. Same way, when you read the document frequently, apply it in problems, you will better know it. So please understand, financial assets can be classified into three. One is where you can classify as amortized cost. The other one as OCI, other comprehensive income. The other one through P&L account, fair value through P&L account. So as far as items to be classified under amortized cost, there are two conditions you got to satisfy. For other comprehensive income, 2. Then no condition, by default category it is P&L account. So people might just understand that is a technical word. This is a technical word. This is old one. Sir, tell me what do you mean by amortized cost? Tell what do you mean by OCI? See, I've just come from an old syllabus, sir. People talk like this, sir. So when in Hyderabad, they were just recalling, the other person was just telling, no. Say in Kerala, uwa. See, in Delhi, acha. What is the appropriate word in Tamil? So, ama. Okay, understood. Understood that this way. I had one friend by name Koya, Mohammed Koya. He was just talking differently. I kote. Then I was just asking, what is this Koya I kote? He knows Tamil. Agaton. Let it happen. As we learn, we get new things. So therefore, you should not have any fear for learning. You have to spend time with people and example books, you will learn it. Now let me tell you what do you mean by amortized cost. Think of a debtors account, you will think of amortized cost. Understand? You have opening balance. In this example, I've used amortized cost only. Opening balance you have, sales you book, then by sales returns you take it, and any impairment which you call it out as a bad debts, and when there is a delay in effecting payment, I charge interest, and when he is paying early, I am providing discount. And lastly, I have cash collected, and before that the closing balance. As how we arrive at the closing balance based on the transactions there, which you normally call it out for PPE as carrying amount, opening balance plus addition minus deletion minus sale, you call it out as a closing balance. That is traditional accounting. Think of debtors account, and debtors account is done only on amortized cost method. What is that? Amortized cost method. What is this OCI? Other comprehensive income. What do you mean by OCI? See, if it were to be a live class with students in front of me, I would have just done a different show. Because asking them questions and I will get a reply from there, I will be in a position to do it. Online with nobody just having any scope for reaction, it is a little tight only. I got to question as well as answer. OCI. What do you mean by OCI? Other comprehensive income. So, what is that we were doing it before OCI? Why OCI has become very important now? What is that? What is it we have considered it as OCI? Why that importance had just come? Why did not we had OCI at all? So it is something like, after knowing chemistry, I know an item called as oxygen. Prior to knowing the term as oxygen, did I not breathe? Yes, we were breathing. After knowing oxygen, we call that as oxygen. Same way, today I am having a term called as OCI. What is that I were doing it before knowing OCI? What is the importance of OCI? Why it should come? Now I will give you an example, then you can easily visualize as what is this OCI. Now I will give an example. For fixed assets, in the old setup, we are having fixed asset schedule. For fixed assets, we are having fixed asset schedule. Opening balance, addition, deletion, depreciation, etc., you are providing. If fixed assets were revalued, you are debiting, understand that it is appreciation. Debit PPE, credit revaluation reserve. So on the liability side, reserves and surplus, I was not having the habit of showing the breakup. Everything swept below the carpet. Now, what they have said is that no item in the liability side in the equity can be taken to equity directly, except for dividend. No item can get into equity without a reference to P&L account. Without a reference to P&L account. That means every movement of my reserves and surplus should affect my P&L account, and only then it should gain entry into equity. Only then clarity will be there is what they thought. So therefore, P&L account itself is made into two. The regular ones, these sort of revaluation reserve, these sort of book entries changes should be routed through this. Then fair value gain or loss on account of actuarial valuation of employees, defined benefit obligations and all that will come through this. So the regular item, my net profit will not get affected. You have another wing which you call it as OCI. This revaluation gain or loss, whatever you are making, actuarial gain and the loss which you are doing it on your employee defined benefit obligation and defined benefit plan assets, those appreciations and depreciations which will keep on fluctuating, which will not be affecting your regular P&L account, should be routed through OCI. Okay. Now, I told you what is amortized cost and other comprehensive income. Understand one important thing is that when we talk something about OCI, here we have two conditions that we have. One is that I should retain till the end. And here there is one cash flow test. What I would just say is you can put it as SPPI test also, solely for the purpose of principal and interest. Here I can retain and sell. The other one is SPPI. this SPPI test is going to be the same for both. Correct? Now, to make this financial asset getting classified in this fashion, where there are three different classifications that you have, that being amortized cost, OCI, and P&L account. It is something like this way. A person who is getting married because of the parents' pressure, what responsibility a family man has got to have, same responsibility he is giving for his life partner. He will retain her for all his good and bads, for all her goods and bads, and for all his goods and bads. So he will retain until their end. That is amortized cost. That is the way our ancestors lived. There was no case that your great grandfather or great grandmother divorced. Correct? That is amortized cost. That is the reason as why I told you it is traditional. Here, what is that I am telling? Retain and sell. What is that? Living together relationship, there is no marriage, but they appear to be in the friends of others, that is in the eyes of others. They are married couple. They can live also. What is that? I will hold my debtors, but when there is an opportunity that is coming up, I will sell it off. I am having the opportunity of learning US GAAP. The scheme of journal entries in US GAAP, where they say that debtors, how they conduct business is different from that of what we do in India. Let me just briefly tell for 2 minutes about us why this sort of classification, why this sort of thinking had just come, which was not there previously. One moment. See now, don't talk. So we understand that in American enterprises and all that, what they do is that they will operate in a very big scale their business, but they consider accounting department, collection department, compliance department, secretarial department, or all they will outsource. They will outsource. That is the reason as why we get a lot of opportunities to do their accounting. See, at that point of time, what these American people or American entities, what they do is that, I'll tell you briefly as why this concept had just come. So where we are doing in a particular way, these are all unheard of. Now you can nearly you can work out, because you may take up that US job from being in India and you can make money. So now I'll tell you, this is the asset that I am selling. This is my inventory I am selling. I am giving 60 days credit. What in India people will do is that I will continue to hold this asset until 60 days. Even though I discount it with my banker, the responsibility of bad debts and all that will be lying with me. Banker will not take up that responsibility. So what in US they do is that I am selling it at 60 days credit. Okay, then I will call my banker. See, now this amount, this receivable, I am selling it to you. Give me 55,000 rupees, where I have billed my customer for 58,000 rupees or $58,000. You take it up and give me 55,000. So I realize 55,000 and I use it for my business. I will expand the business. So retaining this data, collecting, following it up is not my job. So, and what the banker will do is that he will inform the customer that the receivable got sold to us. You have to pay on 60th day $58,000, and he will bring out one proposal. Closely follow. What is that? He is going to tell, supposing you are not in a position to effect the money on 60th day, I will provide you 30 days credit. Pay $60,000 1 month later. He will conduct business in such a fashion that both supplier and customer will be his clients. Therefore, an American firm may find it easier to sell it off rather than retaining it. So therefore, there is a need for us to look into what is your business model. What is it you call as business model? Whether you want to retain it till the end or retain it if possible, or you can sell it off even before the end. That is the reason as why I told you that it is something like living in relationship. Here it is complete Indian traditional marriage. Third one, what is that? He has got no principle at all. What is that? No business model, no SPPI test. This is coming under residuary category. What is that? This is coming under residuary category, and everything has got to be taken up at fair value only. Every change will be taken up there. Gain or loss will be routed through P&L account. In this case, gain or loss will be routed through OCI. So this is in brief. Rest you can try at your place. So only that much you can try it. And I have just developed some amount of interest in financial instruments. The remaining portions you can try of your own. Because in 3 hours FR, you have to take up the examination. Within that time, I cannot teach fully, but some amount of help I can just provide. Revenue recognition. There are 5 stages, and I would say none of the problems or none of the discussion there, even though it is a very lengthy one, I would like you people to go through patiently, solve all the problems. In November 21 examination, there was a problem that was a AS7 sort of problem they have provided, and exactly same problem they asked. I will show you, I will share with you those items. Please just don't worry about that. See, this problem, Kolhapur problem, was not the exact question, but they have been asking, and it is a very popular problem. One moment, I will just that paper flew. Yes, this problem exactly they have asked. Measurement of variable consideration. This is the problem they asked simply. I'll show you. Suggested answer, final financial reporting, December 21. You will find the same problem. Yes, this is the problem. Yes, C question. Same problem that you find here. Same problem. Correct? Same problem they asked. So therefore, and even 103 also, let me just take up. Last time they asked a question. Yes. This problem number, illustration number 40, they have asked in the main examination. Where? I'll just show you. It was May 22 examination question. Same problem. Just see. J acquired 75%. Professional acquired 70%. 75 and 70. So original award, replacement award. Original award, replacement award. So therefore, whatever I am saying, I am just corroborating. So therefore, students, you don't have to have any sort of outside book. Even in my private class, I don't issue any private notes. Only institute study material. I am a basic institute man. So I have stopped authoring a book because I have found institute material is better than that. I know a gentleman who is booking class 1.5 years earlier. In his book, he is referring ICAI material is doing like this, which I consider is equally good. That means ICAI is the best. Even ICAI president may not know this nook and corner because he is doing a different sort of job. As a faculty member, I am telling you, the best is that questions are leaked out that way. It is there in your institute study material. Why you refer to some other market textbook where question will not be picked up from there? Only from here you got to study. Okay, I demonstrated to you as how questions could be asked. That particular question, which I am just referring to, revenue recognition, a person who is knowing about old AS7, he will be in a position to solve it just like that. Just like that, he can do that. Very simple only. But they have just adopted, they have just given AS9 and AS7 together, they have just given. Therefore, it is looking big. Otherwise, it's very easy only. Corporate social responsibility and integrated accounting. Hardly you have 3-4 problems, maximum 10 problems. So this is going to fetch you 5 marks. What is the problem in studying all the questions, institute study material problems? Instead of 70%, they have given 75%. They will add 1 0, multiply it by 2. So they can't sit at what should I say, a room and think about a new problem. See, it is readily available. Even if they exhaust for every examination some question, even after 20 years also, you would be finding unexhausted portion will be 80% remaining. That much you have as the mind, knowledge mind. Our institute is so great that way. I just put a great salute. Whatever I am today, I have attended for very few classes, private classes, rest of which I have depended only on institute material. Proud to say that I have cleared all that in my very first attempt. That was the possibility with at 21 years in 1987. I'm 66 born. I'm 56 running. I'm telling that there is no better book than institute study material. I'm also studying CPA and CMA, where that CPA institute and CMA institute is not providing a material where you can download, where I can download and demonstrate before you. The cheapest ever course, the best course, and all from downtrodden. I was also a downtrodden only. All that improvement I just had God's gift. Also institute. Institute is a semi-god, demigod for me. So if such be the case, for people who are having the affordability, please just do not waste your money on some other book, institute study material. Only you got to study. Only from there they ask. They don't ask from L. Muralidharan book or Mukundan book or Kristan's book. They ask ICAI only. For ICAI, have a problem. There are certain cases they are not done properly. We will write. That is a different issue. Please study. Now, coming back to this. Non-current asset held for sale. Institute has got a special liking. I will just give you certain problems that you got to study. Without studying, please just don't go. I will just show you that. One not five. Say, please just study example 15. Please also study example 16. Without 5, please study illustration 2. Illustration 2, mark it out as very, very, very important. There is a very high chance of this question being asked in the main examination. See, whenever I'm just telling, I'm telling you with all of you there. I'm not seeing you blood and flesh. I consider all of you as my children. My son is also taking up the examination. I just consider every person as how a parent would expect his child to clear, children to clear. I just have that sort of feeling for you. So sometimes he may listen, sometimes he may not listen to me, but whatever it may be, I will continue to tell. See, all this problem, especially problem number 3. Please try. Problem number 4, please try. These are all, let me tell you, you just find excellent problems at the given. Problem number 5. Problem number 6 is okay, but book back question, those problems which I said on 1 or 5, please just don't forget. Make note of that. Then leases. Leases, let me tell you, it's a vast area. It becomes very tight for the examiner to choose a problem because so many you have. So I would say in leases, I will take up leases topic because at this moment, that is the only thing possible. One or 5 over. It is not opening. It is just sometimes when outside things are opening, our folder will not get opened. Corporate social reporting, financial statement analysis, you don't have. 103 we have conveyed. Consolidation, I just conveyed. So module 4 over. Module 3. Module 3. We will take up that 3 later. 116. In 116, I consider lot of good potential problems we have. See, those who have not done 116, it is not the right time to do it afresh because the volume is so big. No, see, that might put you to the back foot. It's okay. Now, I would consider illustration number 45, sale and leaseback is highly potential. Sometimes what I do is that when I'm not in a position to understand that, but I consider that is very important, I mug it up because under examination condition, so some amount of intelligence there, no, some pro rata computation, calculator and all that we can do. Try doing a sincere exercise by spending 2-3 hours. If that is not possible, mug it up and go. So sale and leaseback is so important. There are 9 combinations in which you can have, but the institute has just given only 1. It becomes a little tight for a paper setter to think about other possibilities. So therefore, they are taking up entirely from the institute material. Mark that as very important. Go and prepare well for that. And then say modification, whether it is a modification or not, for that there is a test that you have. So please just try. One moment, I will just tell which are all problems that you got to try. Lease modification, where it is a cancellation on a new lease or it is an old lease. So all that you just find. Even this problem number 38 is also a very important problem. Problem number 38. Problem number 38 also is very, very important for your examination. This problem is also very important. Yes, 37, 38 and 45. Okay. Lease is over. Share based payment. Okay, share based payment we will take up later. I would like to take up on to NDS 41. NDS 41, agriculture. Say this topic is quite easy, but many people used to take it up very lightly. So though it is easy, you got to go with preparation, because the biological asset, when it is bought, say at 25,000 rupees, where fair value less cost to sell is 27,000 rupees. You bought it at 25,000. See, generally a person who is not knowing about NDS 41 will think about at whatever price that we buy is the price at which we are going to book the asset. No, it is not like that. Where they say biological assets are to be booked initially at fair value less cost to sell, if the money what you had paid is not that. So you have to debit at 27,000 even though you paid 25,000. So please understand, only in the case of business combination we have the aspect of having goodwill or capital reserve upon purchases. Upon sale you can have gain or loss. Let me repeat. For when you are selling an item of asset, when you sell it off, you can have gain or loss. But when you are buying, gain or loss will not be booked unless it is a business combination. Even in 103, I have forgotten to tell you, even in 103, there is one particular item called as concentration test. In 103, you have one concentration test is there. Kindly just go through that and don't forget it. So that illustration is there at the top. So just try that. Yes, this example number 1 is there. No, market order is very important. They will simply pick up and ask this in the main examination. Please be careful. Whatever I am telling in the examination, all you will feel it. This is what had happened. Otherwise, I cannot pick just like that this question, that question from the question paper. This November 22 examination question you can take. If this is not appearing, there is one problem that you have in the book back. The book back, you have one problem. I'll tell you what is that. First question, book back. Yes, first question. Thoroughly just go, threadbare. Tamil is not pirichu menjino. 103 vidama poga. 103. Question paper la inga 103 report achirunga. 15-16 marks. Laddu. 20-30 problems. Now itself you mark either the varum. You can just judge. Try 2 times, 3 times. Be prepared. Sometimes when the same question is appearing, you can just like that write. 103, don't miss. Concentration test. I forgotten to tell. Agriculture. I was just talking about agriculture. Agriculture, I told you no. Only in the case of business combination, you can have gain or loss. right? In this case also you can have. In 41 also you can have. They are not given scheme of journal entries. Mind that. Institute material did not give scheme of journal entries. What did I do? See, I was just checking what is the scheme of journal entries. I think so. When you Google out, you can have it from PwC's thing on PwC. See, some supplement you will always be requiring. No? See, sometimes when you have at home, your mom had just prepared all the sweets, sugar gone. You wanted to have some milk. Milk itself is having sweet, no? You take it. Right. Likewise, sometimes in institute material, they are not provided. So, supplement, you can take supplement. Finish it off. When you have jaggery, you can use in that place. No. So, therefore, I just borrowed that idea and done that. So, please just try. So, you have one question that way here. Illustration number 4. Make note. Illustration number 4. Ind AS 41. Mark it out. They have asked extract of P&L account, extract of balance sheet, and you are expected to provide notes. One big question, that is the only question that you have. Illustration number 4. See, this reminding me of my teacher used to do it in the high school. Annual examination there. Before annual examination, one full class she will be telling this, that, note down, note down, note down. All chapters, all questions she would have covered. But that we will know only at the end of the day. That point of time we will make note, oh, this is very important. Our friend will be telling, oh, that. He would have gone and attended some tuition. So that is what it is all remaining. Very easy to score. Very good marks. 80 and all simply you can get. Then share-based payment. Our old one, share-based payment was based on guidance notes. Here, you can just follow institute study material, solve all problems. Very simple this is. Simple. Study all problems. See, whenever you just identify some simple number of problems or list, no. Solve all the problems. See, when you have big accounting standards, so you can judge, okay, this question could come in the main examination. That gut feeling you will always be getting. PPE. PPE, this and intangibles on which you can have exchange transactions. Solve those exchange transactions very well. See, let me just tell briefly about that exchange transaction, PPE and intangible assets. Exchange transaction. What do you mean by exchange transaction? Giving one asset and taking another asset. It's not like old car, new car. That will be lacking commercial substance. Not lacking commercial substance would mean you will have fair value of the asset acquired, fair value of the asset given up, and lastly carrying amount of the asset given up. So what it should run in our mind? Firstly, we are expected to record only at fair value of the asset acquired, because I am booking an asset, I am bringing plant and machinery, and I am giving land and building. So since plant and machinery is coming into my books, fair value of the asset acquired only should be recorded, right? Fair enough, correct. If that is available, that should be the first priority. Second priority is that fair value of the asset given up, because I am selling it off. No, that should also be recorded only at the fair value. But when there is a conflict between the two, which one will be ruling roost? I am talking here without any cash transaction, without any boot. without any cash payment, or you can call this as a boot. In US GAAP, they call this as boot. Fair value of the asset acquired or fair value of the asset given up, whichever is lower. This in accounting standard, they have not mentioned as whichever is lower, but they follow. Why? Because I'll tell you the reason. Third one is carrying amount of the asset given up. Now, plant and machinery, fair value is 1000. Land and building, fair value is 800. Carrying amount of land and building is 350. Now, exchange transaction had happened. Debit, plant and machinery, if I keep it at 1000 and credit land and building at 350 and credit gain as 450, making up this 800, where would I offer the other gain of 200? If I am allowed to do that, I am booking a gain upon purchases. Upon purchases. Only because of this being greater than 800, I am forced to do it. Correct? That is the reason, as in the problems when they solve, they use a term that they have not expressly worded that way, but that is the meaning that we have got to get. What is that we should do? You should not book it at 1000. You can book it at 800. This gain should be restricted to this extent only. Now, let us just take up that this plant and machinery whose fair value itself is 720. Then debit plant and machinery 720, credit land and building the carrying amount at 350, and credit gain how much? 370. Correct? Are you understanding? So this understanding you should have. But when you go through the problem, I think in one illustration, institute committed the mistake. So follow this. This is correct. Now, if you do not have this fair value of these two for some reason, if I got to record this, what is the value at which I will be recording? Debit plant and machinery at 350 and credit land and building at 350. Okay. This is the place where you got to apply your mind. Now you can just go through, refer to that particular case, both in intangible and in PPE. I think in PPE they got it right. Only in intangible they went wrong. In both the cases, the wording of the accounting standard remaining the same. But institute did right in PPE and not done right in intangible asset. That you can just check up. What do you mean by impairment? Impairment shall be considered as a defect. It could be a physical defect. It could be a financial defect. It could be a combination of these two. We are expected to compare this carrying amount with recoverable amount. What is that recoverable amount? Recoverable amount could be lower of the two, which is nothing but fair value less cost to sell. The other one is value in use. Whichever is higher, not whichever is lower, whichever is higher of the two will represent recoverable amount. That has to be compared with the carrying amount, and only when carrying amount is greater than recoverable amount, the difference will be taken up as impairment loss. Correct? Why it should be greater than the two? Say simple logic only, but many a times the logic is not explained by the institute. That is a problem. So there is a place at which we are expected to fill the gap. Supposing this asset can be sold for 100 rupees. If I continue to use this asset, I will get 80 rupees worth. Why would I continue? I can as well sell it at 100 rupees. Supposing this is considered to be 80. If I sell, if I continue to use 100 would mean why I should dispose of when I'm likely to get 100. That is the reason as why whichever is higher, which is coming up here, compare it with carrying amount, the difference will be taken up as impairment loss. Here is a place where you got to be very, very careful that carrying amount of the asset to which goodwill share can be added. Now it will become goodwill share has got to be added. Now it will become expanded goodwill. What is that? Expanded goodwill. Now expanded goodwill versus recoverable amount. Supposing this is 800 and this is 200. This becomes 1000. Now recoverable amount is 750. Now the difference between the two is impairment loss of 250. How this 250 has got to be taken up? So where alternative could be adjust goodwill 200, balance to individual asset 50. Third one, adjust fully with intangible assets. Sorry, individual assets. Third, pro rata. Would mean in DS 36 is very clear. They say firstly you have to adjust the goodwill and balance to individual asset. Firstly, you got to adjust fully in goodwill, balance if any to individual asset. No pro rata. Having said this, there is one pro rata also you have. What is that? In the place of goodwill, if it were to be corporate assets, what do you mean by corporate assets? Where an asset which is common to all assets. A corporate asset would mean it could be ERP, SAP I just bought, costly. Oracle Financials I bought, Bond I just bought, JD Edwards I bought. So that is not to be understood that it is only for manufacturing. It is for all. So when impairment is identified, when share of corporate assets were to be there, then corporate assets fully 200 and balance individual or only to individual assets or pro rata. So that point of time, this will not work. Pro rata is what you got to do. If 250 is there, distribute that between individual assets and corporate assets. What is that? 800 by 1000. 200 by 1000. 80%, 200 here, 50 here. So individual assets 200, corporate assets 50. So after that it is going to be 800 minus 200, it is going to be 600. And 200 minus 50, this is going to be 150. And 750 is the recoverable amount you are bringing. So you got to be very careful. So just by reading, trying few problems you will not get, you got to be very careful. And I will identify the problems that you got to go prepared for that. So book back questions are very, very important, or problems which are closer to book back. Towards the end, some advanced level problems they have given. So go prepared for that. Comprehensive illustration and all that they will be providing. Yes. Problem number 21. Illustration number 21. Question number 2. Book back question number 2. Question number 3, 4, 6, 7, 11, 12, 13, 14. These are all very important on NDIS. This thing, fair value measurement. Fair value measurement, you got to have some amount of nick on SFM. That is, it will have a shade of SFM that you got to read. So in SFM, we have alongside of mergers and acquisition, some chapters called as, or one chapter called as corporate valuation. That sort of problem you have. I will show you that also. One moment, I'll just come. I will answer to one call and come. One moment, I'll just come. Actually, sorry. We have to live with the nature. Please understand. So for a very long time, I was just building it. Fair value measurement. Book back questions. Say all book back questions are very important there. Market approach, income approach, determine the equity value on the measurement date on the above details. So let me tell you, all the problems on 1 and 3 are very easy. That may be asked once in 4 chances, but very easy to score. That I compare it with SFM corporate valuation. I'll show you that also. Chapter 12 there. Whatever you have towards the end there, problems here in corporate valuation, and there is something called as economic value added. Previously it was in FR, now they have shifted to SFM. So please study them with greater care. So fair value. So coming back to this FTA. So let me tell you about FTA. I had the opportunity of speaking before members when NDAS was there initially, and which was considered to be a little cumbersome because first time you have to adopt. Who is considered to be a first time adopter? First time adopter, normally we think about preparing it for the first time is a first time adopter. Is what we will expect, but it is not correct. A company which is making unreserved statement that it is adopting for the first time NDAS, even though when they are not doing it, such companies will be referred to as first time adopter. Whereas a company which is adopting for the first time but failed to make this statement, what is the status of that particular company? It is not a first time adopter. That is, people normally tell this way, no, substance over form. Substance should be given importance than the form, is what they tell generally. But in this accounting standard, form is more important than substance. If you have done first time adoption, but when you are not telling that you are adopting it for the first time, you will not be considered as FTA. I have done, but I did not tell, would mean you are not a first time adopter. Next one, I have not done first time adoption, but I am telling it is a first time adoption, would mean I will be considered as first time adopter. Why? Why this sort of thing? We would like to know. Now I am a subsidiary company, correct? I am preparing for the first time my financial statement to the parent for the purpose of some work. I have not declared. So will I be qualifying as first time adopter? No, I am doing it for internal purposes. So I am just doing it. Another company which they have not adopted, but they are telling it out as they are adopting, would mean they will be considered as first time adopter. So what is very important is what you are not adopting or not. What you are telling us adopting or not adopting will change the color or the scenario. This is what you find throughout the discussion there. And how to find a remedy, what is the role of an auditor when a company is simply saying adopting but they are not adopting, what sort of role auditor has got to have, all that they have discussed. So here also we do have problems, all the problems there you have got to do. Forex, next one. See, this is by and large the same as we have seen in the case of old one. So all the problems there you have got to do. There is nothing new I am going to tell. See, the next one, in this particular case, I would like to take up 33. If you have done earlier AS 20, this 33 will be easy. Now, this 33 EPS for which you have something called as bonus factor. Bonus factor is equal to existing market price divided by theoretical X-rates price, where theoretical X-rates price is equal to M into N plus R into S divided by N plus R. What is that? M into N plus R into S divided by N plus R. Theoretical X-rates price. So people might understand, sir, this is looking like SFM. Yes, I would say it is SFM area only. So where you have something called as security valuation, in this topic you have theoretical X-rates price given. So you have got to integrate your studies between the two. Now you just see valuation of rates. Valuation of rates, they talk something about theoretical X-rates price and all that. So study along with that, you will come to know what is theoretical X-rates price, and you are expected to use this bonus factor wherever you have bonus shares. Wherever you have bonus shares and wherever you have rates shares. Wherever you have bonus shares and wherever you have rights shares, you have got to take up. So therefore, study that with that particular accounting standard. 37. 37 is to do with provisions, contingent liabilities, contingent asset and all that. இது என்னன்னு பாருங்க ப்ளீஸ். அங்க போய் படி, அங்க போய் போ. வெளியில போய் பண்ணு. See, many a times they will give you a sort of an information. They will ask what is it you are expected to do. So what I normally do in the classes is that a liability for which I just go for definition this way. A liability will arise on account of past event, which will result in present obligation, which will result in future outflow of resources embodying economic benefits. So sometimes your theoretical questions can also have some working notes. So don't get the impression that working notes should be developed only for problem areas. For theory areas also you have. Okay. See, number one, you have to ask a question, what is a past event? Whether you have a present obligation, then whether you have outflow of resources. So you have to ask a question, whether estimate is possible. Invariably you got to say yes. When you have to say no means you should have a lot of details to say no. Okay. Item number E. What is that action that you got to take up? Then what is a journal entry that you got to pass? So this way tell. So I will give you a scenario, then you can easily visualize what exactly I am trying to convey. I have effected a sale and it is my past policy, where it is a past policy. Past event is a sale made. And my past action resulted in constructive obligation, which is present. Yes. Outflow of resources embodying economic benefits. I got to refund. Estimate possible would mean yes. Because past, how much of sales had resulted in refund, how much is the refund, all that I know. எப்படி மிஸ்டு கால் ஆயிடுச்சுன்னா எப்படி தெரியும்? Action is to provide. Debit P&L account and credit provision. மிஸ்டு கால் ஆயிடுச்சுன்னா கொடுங்க, நான் அப்புறம் பேசிக்கிறேன். நீங்க எடுத்துட்டு கொடுத்துடணும். So past event is a sale, present is yes, outflow is I will refund, estimate is possible, action is I will provide, and journal entry. So when you have those steps that you are taking up, it becomes easier for you to present your answer. Okay, that is for 37. In 37, contingent liability is not to be given as the alternative. If the chances of paying is very remote, do nothing is an alternative. So don't get the impression that contingent liability disclosure is final. Don't have that impression. If the chances of paying the contingent liability is remote, you do nothing. Tell that chances are remote, so therefore do nothing. That is the one that you have. 40, investment in property. It is a fairly very simple one, not many problems that you have. So whatever problems that you have, you please just convey. Same is the case for 108 also. This is like your old AS17 operating segments, where you have revenue base, asset base, profit or loss base. If the enterprise's revenue on it 10% when it is booked by individual segment, then it becomes a reporting segment. Asset and a profit or loss when you have, you take up all the profits, you take all the losses, and in absolute values, whichever is greater, you take it up as a base on which 10% if any segment is giving, that it becomes reporting segment. So organization's decision maker, when he feels that if any of the divisions which you find not qualifying through threshold, they have the nomination of identifying a non-qualifying segment as qualifying segment, I mean reporting segment. And one more important condition that you have is that where you have revenues classified into two as external and internal, eliminate all the internals, take up only externals, that is enterprise revenue. If all the operating segments, external sales when you take up, you should at least be yielding 75% of the enterprise revenue. By chance, when you find whatever you have identified through turnover, asset and the profit, as well as management discretion, when it is not reaching 75, then you can elect the other segments which are not classified as operating into operating segments until you reach 75% threshold. These things are all very interesting there, and you can easily knock these under examination conditions with no big effort. So solve all the problems there. Same is the case for interim financial reporting. This is like your old AS 25, not much of a change that you have. Please just try all the problems. You have a great chance of being asked. And 24 is about related party disclosure, where the parties, when they are related, the related party relationship has got to be disclosed if relation is arising out of control. If related party relationship is not arising on account of control but on account of significant influence, then no disclosure is required when you don't have any transaction. One and only when you have transaction with significant influence, you got to report, otherwise no reporting. If the related party relationship is with control, when there is no transaction, you have to report the relationship, even if there is no transaction. You got to be very careful with that. Then, coming back to 19. In 19, we have employees' benefits, where we classify them as short-term, other long-term, post-employment and terminal benefits. Short-term, terminal benefits, other long-term and post-employment. Here, problems involving short-term absences are very important. How compensated absences, what are all vested absences, vested leaves, some problems are there, please study that. Terminal and other long-term are not that important. You don't have many. Post-employment, yes, you do have. In that, we have defined contribution plan, defined benefit plan, defined contribution plan, defined benefit plan. Here not much, here you have a lot. In this, you will be asked to prepare defined benefit obligation account, and you will be asked to prepare plan assets, otherwise they will think that we are avoiding. Then comes defined benefit obligation, plan assets, and then you have projected unit credit method. Projected unit credit method, PUCM. I will show you that. That is very important for the examination. Projected unit credit method. This problem is an ideal example for projected unit credit method. Solve this problem. What is the problem number? Illustration number 15, page number 9.38. Yes, this problem is very important. Problem number 24, RKA Limited. Okay, so here is a place OCI will also be coming up. So please just understand OCI debit, P&L account debit, and whatever we have discussion that we have made, we have got to apply it here. Then solve all the book back questions. All the book back questions, please solve. Problem number 7, almost the same as that of what we have just seen, RKA Limited. All the book back problems, please solve. 19 is over. Then don't forget to solve problems on cash flow. Though it is very easy for CA final students, please study problem number 7. Same is the case for 8 and same is the case for 1. And 23 we have not taken up at all. 23 is about borrowing cost. Say on borrowing cost, there are some wrong opinions created by CA Institute. So sorry to say that land is a qualifying asset, but Institute is just taking it up as land is not a qualifying asset, because I've checked up with the original text of Ind AS as well as IFRS as well as US GAAP. They say that land is purchased for the purpose of constructing a mall, for the purpose of constructing a factory, for the purpose of constructing a golf club where I got to scape the land. It will take substantial period of time before it is put for its intended use. So some of the problems in PPE, they have just went on to say that land is not a qualifying asset, no problem. But what had happened is that when land is not a qualifying asset, when I have taken a loan for that, interest paid on the loan, they have capitalized. See, when land is not a qualifying asset, the loan taken for the land will not qualify for the purpose of capitalization. You should be consistent, no. But they have not done that. So I will show you that in the problem on A16. Say, I am not trying to cause any confusion, so please just understand what exactly is the meaning. Say, in one case, they've said 9 months is not a construction period, so therefore they have avoided that. In yet another case, they have openly conveyed that land is not a qualifying asset. You just see, both the purchase of land are associated here for borrowing costs, they have mentioned it. So capitalize the interest cost incurred for 7 months. Purchase of land would not trigger off capitalization since land is not a qualifying asset is what they put. Okay. When land is not a qualifying asset, on what basis they have calculated the finance cost? They have calculated the finance cost based on the total borrowing. So they have taken a loan for 17.5 million, which includes the land cost to the extent of 10 million. In 17 million, 10 million is land cost itself. Land cost itself. So on 17.5, they have taken up the finance cost. The finance cost rate, let us just find out. 17.5 into 0.06. For how many months they have calculated? Calculated for 7 months into 7 divided by 12. So 6.125. They have just mentioned. But here they say land is not a qualifying asset, but the loan taken for the land they have capitalized. So this is a mistake that they have committed. I do not know whether you people have understood the mistake that they have committed. So what is appropriate? Let me tell you. Land is a qualifying asset. Why? Because land is not available for its immediate use upon purchases. I bought the land only for the purpose of constructing a factory. How land can be put to use immediately? Only those items which I can put to use immediately will become non-qualifying asset. Plug and play items. If I buy the computer, I can just put it and play it on. Whereas the land, I cannot use it for the purpose of production. So there, the very first edition, what institute had just developed was correct. Subsequently, they went wrong. So you can put a note. Say wherever you have some controversy, so don't develop the wrath of the institute. You put one alternative, put another alternative, put a note, or develop 2 columns. What is the problem in it? So examination is a place where you should not be disputing with the person. Though I am telling with confidence, because confidence comes out of association with the subject for a long period of time. It is when 1989 started taking classes. Now it is 2022. Even during COVID times, we have just continued. It is 30 years plus. I'm also studying CPA for professional development, and that way I can just confirm to you that it is a qualifying asset. Look into the first edition, what institute had just released. Those who got the institute material in the first edition of this new syllabus, they are given it as a qualifying asset. That is correct. Whereas this one is wrong. Coming back to this, whenever you have a hard difference between institute, provide one alternative. This is one author's opinion, another author's opinion. You tell politely. You need not fight, but you put your point in a very gentle and firm manner. Sir, this is my opinion. Sir, that is your opinion. That's it. Why you have to show your face like this? Smile and tell, this is my point, sir. This is what I have. I take your point, you take my point. That's it. Because finally he is going to what marks? Why you dispute? Why you have to take in the bad books of that person? He will be good for all. Try to be good for all. Even Gandhi could not be a good person to all. Though controversy is surrounding him, but still he is considered father of our nation. So he is not good for all. So we are all very small dust. Now coming back to this. This is with respect to 23. 23 is just, we have just conveyed that particular point. You have got to be very careful with that. Now, lastly, I have to take up on to 10. Events occurring after balance sheet date or a reporting period, where you have events occurring during the period itself, but some of them had fallen in the next period also. So if it is related to that period, then we are expected to account for them in that period. Account means does not necessarily record them in that books. Either you can adjust or you have to disclose. Either you can adjust or you can disclose. So such events you can say as adjusting and non-adjusting. So what is that adjusting? So you find the condition of the asset on this date for which this event, when you get associated, then such event will be taken up as adjusting. So if there is no condition on the balance sheet date, then it becomes non-adjusting. Example. Listen to the example carefully. Listen to the example carefully. Where you are closing the books by 31st of March, one customer is calling or intimating you on 15th of April that he had filed his insolvency petition and is going by voluntary liquidation and all that. He is telling, and he owes you 10 lakhs. Why he does is that there was some fire accident in his godown, consumed all the assets. He is at irreparable stage. He had circulated to all his suppliers, and we are one of the suppliers, and we got the news on 15th of April. Okay, the moment we are conveyed this way, immediately people will say on 31st of March asset was there, that being the debtor, so therefore it is adjusting. No, it is not like that. It is not about an asset which was in existence on this date. It is all about the condition of the asset. It was on the date, the condition was of the asset. On 15th of April, he informed you, but you do not know when the fire had occurred. Fire might have occurred before this or would have occurred between this. There is this one, the first one is on or before. Second one is after 31st of March. If this were to be on or before 31st of March, the condition of the asset was bad. One of our friends might say, sir, I did not know. I did not know about the condition of the asset. Your knowledge about the condition of the asset is no matter. On that day, it was doubtful. The condition was bad. Insolvency is putting you to bad debts now. You are doubtful, now it has become bad debts. If the fire had occurred after 31st of March, say by 6th of April, 9 days later he had declared this, would mean on the balance sheet date it was good. Correct? Depending upon the condition of the asset, it is not about the existence of the assets or the existence of knowledge of the asset or the existence of the knowledge on the condition of the asset. It's not like that. It is all about the condition, situation of the asset or liability. You have got to be very careful in while you reading. So therefore, the example what you have just given, where under examination condition, you have to put it clearly, case number 1. If the condition on that date was known, the condition on the asset that is not known, you can say if the accident had occurred on or before 31st of March, the condition of the asset was bad, that is doubtful. Because of this event, it turned bad. So therefore, it is adjusting. If the accident had occurred after 31st of March, that is on 6th of April, you have to say the condition of the asset was good. And therefore, this event to that condition has got no relation. So therefore, it is to be taken up as non-adjusting. Non-adjusting would require only disclosure. If it is affecting going concern, you have got to redraft. Exceptional cases, you may adjust. That's all. Now it is 12:45. Now we have just covered as much as possible with the given time. Now we are looking for the floor participation. Students, if you have any doubt, you can just raise, either by putting it into the chat box, or if there is any other mode, you can just communicate. Come on. We have come to a FAQ in 2 hours and 45 minutes non-stop. We have just gone. And that too, at an increased volume, I have just gone. Come on, come on.
There is no question from students yet.
Huh?
There is no any specific question from students till now. I'm actually checking the YouTube also, YouTube chat box also, but there is no specific question from students.
Okay.
Yeah, only Yuvraj just said that, yeah, to your comment, he have agreed that, yes, sir, ICAI is the first institute in India providing a qualification purely based on merits. He have agreed. You have said one time like this is the best institute like that. So you have given some support.
There is no dispute on that, because
Yeah, yes,
I
sir.
myself being a beneficiary.
Yes, sir. No other specific questions.
Okay, shall we close
Yeah.
then?
Yes, sir. Sure.
All the very best. Happy Deepavali to all of you. Happy New Year. And by 2023, we will all be seeing as members in one of the CPE meetings or in any other forum. Thank you. All the very best.
Thank you so much, sir. Thank you so much.
Thanks. Thank you so much, sir, for giving your valuable time for us and accepting the
There is one
short
person.
notice.
There is one person, Chivian,
Yeah.
is asking, could you please repeat the calculation of goodwill in CFS?
Yeah.
So I will spend some time onto that. See, goodwill can be computed in two different ways based on NCI. NCI at fair value, then NCI at net assets. Majority of the problems by default falling under NCA at net assets will be partial goodwill. So NCA at fair value is a full goodwill. Okay. So that way, goodwill will have two different bases of computation. So that is nothing but on the date of acquisition, net assets of subsidiary company has to be computed, multiplied by NCA percentage should give you NCI, extremely sorry, not NCA percentage, at parents percentage. Because why goodwill has come? Because of NCAs only it has just come. So net assets of the subsidiary into parents percentage minus investments. If your investment value is greater, then it becomes goodwill, or else it becomes bargain purchases. So at the last moment, it becomes a little tight to tell elaborately, but I have answered to that question with the available time. Okay. Thank you. Any other query?
No, sir. That's all.
Okay. Thank you. All the
Thank
very
you
best.
for valuable time, sir. Thank you.
Thank you so much, sir.
Yes, this was very useful session. Sir have shared a lot of important areas. So I hope this will be very beneficial for our students. For students, SICASA is conducting a lot of events. So please make best use of all the events and all the classes. And also they are conducting various competitions. So please do participate in everything and make a best use of all the efforts which SICASA is conducting.
And Hemant, kindly invite nominations also.
Yes, nomination for committee member, right, ma'am?
Yes.
Yes. So managing committee, we are having SICASA managing committee, which is head by one CA chairperson, Satishan sir. So he will be always, I think he is the chairman. Below him, we are having 12 committee members who are students. So SICASA is now electing those students. So students who are doing their articleship can give their nomination. They can contact Vijay Lakshmi ma'am or current committee members to know about the process of applying to managing committee. Yeah, this is consisting of 12 members. So 12 people will be selected out of all the application, and out of 12 members, they will choose vice chairman and also secretary and treasurer. there are 3 posts which they will be electing out of 12 members. So this is the brief about it. Do you want to add on anything, ma'am?
No, that is it. So we invite the nominations. You can please mail to sikasa@icai.in as well as sircdean@icai.in. So these are the 2 emails which they can express their interest and share their any clarifications or queries that they have can please be written to sikasa@icai.in. It will be promptly replied. So thank you all students for the time spent. I hope this session was useful to all of you, and we'll look forward to the next session or final. The intimation will be shared shortly over all the groups as well as through the Board of Studies. Thank you so much.
Thank you, everyone. Have a nice day.